Hey, what's going on, guys? I want to share with you a little quick lesson right here. As you can see, we're in high tide, and the main thing I want to share about this right here, I want you to envision the market when it's in an optimal state, and I'm going to tell you what I believe is an optimal state here in a second. This is a realization I made today. I traded today, lost a little bit of money, and then I made a realization afterwards. I personally find those are the best trading days. When you lose, no one likes to lose, but also understanding why you lost and having some understanding, objective understanding about the market enough to be able to come to a relatively reasonable conclusion about some of the things that contributed to you losing. What this is, you see in these waves hitting right here, this is an example of when you show up in the market and you got news in the morning and you got traders that are ready to take shots and hit the markets, okay? Now, like everything else in life, good times don't last forever. High tides don't last forever, and low tides don't last forever either. So the main thing is that I made a mistake today where I showed up too late in the day after high tides, and I was trying to surf medium to large size waves. A very common mistake. But I want to explain to you a crucial thing that I think is personally important. And I'm going to start by asking you guys this question. I'm going to answer the question for you, which is, how do you make money in trading? How do you make money day trading? For me, the answer is this, and it's similar to that Mark Douglas podcast from a long time ago. It's about supply and demand. You need other traders to bid up the market if you're going long and you're expecting it to go up. You need more traders to go short and to be putting in offers and holding the offers if you're going short and you're betting the market's going to go down. You need other traders with conviction. That's the buzzword of today's video, conviction. You need conviction, and you need to be trading in times when other traders have conviction. So these waves right here, they have conviction. There's a very high probability that right now, if you go into those waves and you don't know what you're doing, you're gonna get run over. You're gonna get hurt. You're gonna get burned, whatever, okay? So you need to have conviction and understanding about your own trading. On top of that, I would say you wanna be trading during times when other traders have conviction about the trades that they're taking. When is that time? I would say towards the beginning of a day, depending on if there's news announcements. Today there was a CPI announcement, okay, in the morning. I traded in the afternoon. You know what I realized about the afternoon? No one was there taking shots. It seems that all the traders were gone at that time. You know, I had a couple of ticks in my favor on a bond trade. I also had a couple of ticks in my favor on a Bitcoin futures trade. But overall, there was no conviction. There was no follow through on any of those moves. And I ended up cutting them for losses because I had nothing else to do. I couldn't do anything else. And that's just how the game is played. You know, that's just how what we had at that moment. And the mistake that I made was I was engaging in the market, taking what I would consider to be high conviction plays during a time where there's no other high conviction traders around to materialize those moves. You understand what I'm saying? So if there's anything you can take out of this, maybe it doesn't apply to your trading setups, but for me it does. If you had to choose a time for trading, it would be when there's more traders likely to show up with high conviction in their trading. You know, could be banks, institutions, other proprietary firms. Pick a time where there's more eyes on the market. And then on top of that, pick your areas for trading, or areas where you also think that other traders believe those to be high conviction areas, and then use all of that in combination with what you're actually seeing on the tape to see if there's actually some high conviction traders coming in and hitting those bids and taking those offers. You know how some people film videos with an iPhone front cam? This is what it looks like. Compare that to what you were just watching. Which one you guys like better, to be honest? Peace. Tape is the #1 truth of the market. So it's about getting a feel for a certain tape. And also learning about crypto, because if you look at Binance, it looks like there's always activity because there's fucking thousands of transactions going through every second. However, you got to compare it to different liquidity pools. What's complicated now is that since Bitcoin's becoming more mainstream, you have other hidden liquidity pools. So it's becoming more like a Forex, you know what I'm saying? Trading like one at least. So, bro, micro Bitcoin futures are pretty cool. They're getting more liquid, but also it's becoming more random. So it's about understanding the things that are beyond the actual price action and volume, which is actually it's the conviction of traders, the time of the day, news sentiment. It's basically what the market is gonna expect from news if it reacts to news, if there's conviction of traders on a reaction to news. All of this plays into the conviction of traders. So, you know, you can see conviction of traders on the tape, but you also have to have experience watching the tape in order to determine that, and sometimes that doesn't last forever. You might identify a pattern on the tape during a certain period of the market, and then it'll never be seen again. You understand what I'm saying? You'll only see a variation of it in the future. So that's tape. I love it. And the first time I probably heard about tape, and someone who was really always talking about tape, was the trader Sang Lucci, who is a content creator, and he has a mentorship masterclass, not affiliated. But yo, that guy blew up $1 million portfolio, and that guy's got some serious swagger, bro. Because that's what it's all about, man. It's about what you did to get it. Another thing that Sang Lucci said was that the difference between a trader who makes it, who makes a big bag, versus one that never does, is the one that does has more conviction, and he's willing to stick along with his trades longer. That's a quote from Sang Lucci, and he's a G. I found this coast, and it's during high tides. So I think it's smart to trade when the market is in higher tide, because it means that there's going to be more traders. There are more traders objectively present, hitting bids and offers, making trades work and making trades follow through. Now, of course, there's limits to that too, and also based on your level of skill. If you're not comfortable trading during high tides, you're going to get fucked. And there is a high tide. There is a level of tide where everybody gets fucked, except for the fastest motherfuckers, and we don't even know who they are. So that's what I'm saying, G. Timing is everything. I'll see you guys later. Cheers. Hope you enjoyed it. High tides is when traders are being forced to commit or not commit. There's a lot of activity, and you better watch out, because if you're not ready for that, you can get absolutely steamrolled. Low tides are another thing, because if you make a mistake, you could find yourself trying to surf high waves when there's low tide, and that's also very dangerous. So in my opinion, it's about knowing where you can operate. What's your sweet spot of where you're comfortable operating, and be able to identify if the market is in that condition. Because if it's straying too far towards high tide or low tide, aka conditions that you're not really comfortable in, or that can catch you off guard, or that have the potential to fuck you up, you know, that's when you got to be stopping. So that's how I would develop a system around parameters that I know how to trade. And I think that that's very doable in today's conditions. Just understand that certain market regimes, they shift, and sometimes they never come back. So it's important to adapt to new regimes. Thank you.